So the first thing to understand is what is legal tender. So if I have to use it in a manner or in a definition form, then legal tender is something which can be used to pay back the debts or to pay back the sovereign debts of the country. So it will never be, and it was never intended to be used as a legal tender, right? So that is the first thing which is to be made clear. Now talking about the legality or cryptocurrency being banned in India, because you might hear that what nowadays a lot of people are saying that cryptocurrency has been banned in India, cryptocurrency is not being allowed in India, and at the same time you might be hearing that exchanges such as WazirX or others are still operating in India. Then how come that is possible? Then this leads to two conflicting situations. So the answer to this is that cryptocurrency has never been banned in India. Earlier it was not regulated in India. Now it is being regulated in India, both in terms of taxation provisions under Income Tax Act, as well as other provisions such as PMLA, etc. What was earlier there and still continued to be there is that it is not being allowed as a legal tender. What is being allowed as a legal tender is the digital rupee, which is to be introduced in a full-fledged manner by the RBI itself as the digital rupee of India. Apart from that, all other cryptocurrencies are banned as a legal tender in India. So then if there is PMLA, then why is it still being allowed, or why is it still being brought in the Income Tax Act? So now it is a very clear situation in income tax which says that the legality of the transaction is not a question as far as income tax is concerned. Income tax means any income which is accruing arising in India is to be taxed in hands of the recipient, right? So in that case, it has to be taxable in India. Whether or not it is legal or illegal is not in the purview of the Income Tax Act. For that, things such as introduction of PML and everything has been brought into picture and will be taken care accordingly. So virtual digital asset, right? So the word used in income tax is basically virtual digital asset. It is not cryptocurrency itself. So what is the meaning of virtual digital asset, or whether it is synonymous to cryptocurrency or not? So that is the next question. Whether virtual digital asset is synonymous to cryptocurrency, or whether it is a bigger subset, or whether it is a smaller subset of cryptocurrency. So for this, let us move to the next word. It speaks that this is just a background, that section 2 subsection 47A clearly defines what is VDA, virtual digital assets, and the entire gamut of taxation as far as cryptocurrencies or whatever we may understand in our next few slides is based on this concept of virtual digital assets. When it has been brought to taxation, it has been brought to taxation in the period through Finance Act 2022, that is on or after 1/4/22. So now what is a VDA? What is a virtual digital asset? Let me read it out, and it's straight from the law. Any information or code or number or token not being Indian currency or foreign currency. That means not including a rupee and not including dollars, or for that matter any other foreign currency. So any information or code or number or token generated through cryptographic means or otherwise. So what is a cryptographic means? For example, a blockchain. For example, data mining. Right? By whatever name called, providing a digital representation of value exchanged with or without consideration, with the promise or representation of having inherent value. See, this might sound similar to a derivative definition, where its value is derived from the value of the underlying assets. or it is inherited from the value of the underlying asset. So similar to that, this is also happening. Let us move forward and then we'll recap this. With the promise or representation of having inherent value or functions as a store of value or a unit of account, including its use in any financial transaction or investment, but not limited to investment scheme, and can be transferred, stored, or traded electronically. So let me just sum it up for you. It is basically any kind of digital asset being created in a form of information or code or a specific unique number or token. Like if you see in a normal form, encrypted chats or encrypted data. So that can also be the start of a virtual digital asset. It might not itself be a virtual digital asset, but it might be the mode of creation of a virtual digital asset generated through cryptographic means. And what is the other essence? That it should be capable of deriving a value or representing a value in itself, or through some inherent value through some underlying assets which it represents, right? And is capable of being stored in its digital format, right, as a value or a unit. So this is the first part. The second part talks about a non-fungible token and NFTs, which you might have heard. Very recently, the NFTs was in uh, talks, because you might have heard that an NFT has been sold for this much amount in crores, in millions, in billions. What is basically an NFT? NFT again is basically a unique form of representation of a particular data, which often means an art, which is unique and can be hashtagged or can be identified to a particular origin. And the third form is any other digital asset as the central government may by notification in the official gazette specify. Now the government came into picture for this notification and came out with a notification on 28th of June 2022, where it provided the definition of a digital asset and what is not included in the digital asset, sorry, in the virtual digital asset. So this notification came on 30th of June, and it states that the central government hereby specifies a token which qualifies to be a virtual digital asset as NFT within the meaning of subclause A of clause 47A of section 22, but shall not include a NFT whose transfer results in transfer of ownership of underlying tangible asset, and the transfer of ownership of such underlying tangible asset is legally enforceable. So understand, friends, NFT is taxable, but what has been excluded from the definition of VDA is a NFT. Like I said, NFT is again a representation of a form of a digital asset, but it says that if NFT is backed or is representative of a tangible asset, and that tangible assets transfer is legal, then such NFT shall not be included in the definition of the virtual digital asset. It might be separately taxable as a capital asset, but will not be included in the definition of a virtual digital asset, right? And as already stated, currencies like foreign currencies, Indian currencies shall not be included in the definition of virtual digital assets. So the first thing which we have understood is that NFTs are virtual digital assets are a broader perspective to what we generally understand as cryptocurrencies. The second point which we now need to understand is how is this virtual digital asset classified? Whether it is a capital asset, whether it is a business asset, or whether it is to be taxed under income from other sources. So the good thing, folks, about this as far as income tax is concerned is income tax has made it clear whether it is a capital asset, whether it is a PGBP, whether it is a IFOS. In all cases, virtual digital asset is being taxed at a equal rate. as far as income tax is concerned, it is treating all types of trades in virtual digital assets, whether as a capital asset or a PGBP in a standard format. Means the tax rates are same, the allowability, disallowability of certain things are also same in all the heads. When it will be treated as a capital gain, if the virtual digital asset itself is treated as a capital asset and is purchased in that manner by the investor who's actually transferring it, right? When it will it be treated as PG, like we normally understand the capital gain concept or the PGBP concept. So virtual digital asset will be treated as inventory when it will be purchased for trading purposes and hence chargeable under the head PGBP. The long term, short term of capital gain again is based on the period of holding, which is 36 months in that case, right? And then for income from other sources, like supposedly you are receiving it as a gift, then it will be taxable as a income from other sources if that concept of 50,000 is exceeded. So here the normal concept of capital gain, PGBP and income from other sources is applicable. Nothing new to understand in that. Now, what is the tax rate? Taxability on transfer of VDAs under section 115 BBH. So the good thing is that a new section has been introduced, which is 115 BBH, where the total income of an assessee includes any income from the transfer of any virtual digital asset, notwithstanding anything contained in any other provision of this act. So the good thing here is that, see, it talks about any income. It does not categorizes here between capital gains or PGBP or IFOS, right? Any income from the transfer of any virtual digital asset, notwithstanding anything contained in any other provision of this act. The income tax payable shall be the aggregate of the amount of income tax calculated on the income of transfer of such virtual digital asset at the rate of 30% and on the balance amount as per the total income concept. The amount of income tax with which the assessee would have been chargeable had the total income of assessee been reduced by the income referred to in clause A. Right? So there is a flat rate of 30% on VDAs. Notwithstanding anything contained in any other provision of this act, no deduction in respect of any expenditure other than the cost of acquisition. So friends, two things to understand. First, there is a flat rate of taxation of 30%, notwithstanding whether it is charged as a capital gain, a short-term capital gain, or a long-term capital gain, or whether it is chargeable as PGBP, the rate remains same, 30%. So then a question might arise in our mind, then why is the need to classify between a capital gain or a virtual digital asset? Notwithstanding anything contained in any other provision, no deduction in respect of any expenditure other than. So what is allowed is only the cost of acquisition. No cost of improvement, no expenses on transfer, no other expenses which is allowed. Or allowance or set off of any loss shall be allowed to the assessee under any provision of this act in computing the income referred to in the clause A of subsection 1 and. So no losses or no set off of losses shall be allowed and no carry forward of losses shall be allowed, because you see no set off of loss from transfer of the virtual digital asset computed under clause A of subsection shall be allowed against income computed under any provision of this act to the assessee, and such loss shall not be allowed to be carried forward to succeeding assessment years. Now the question comes that if there is no set off of losses, then what is the utmost outcome of supposedly if there is any other loss in any other capital asset and there is a what you say, there is an income in this virtual digital asset, so that loss will be allowed. So referring back to the first point A, no deduction in respect of any expenditure or allowance or set off of any loss shall be allowed to the assessee under any provision of this act in computing the income referred to in clause A of subsection 1. Right? So it means supposedly if there are two virtual digital assets and there is a capital gain on one virtual digital asset and there is a capital loss on another virtual digital asset. So in that case as well, the loss of the one virtual digital asset will not be allowed as the loss on another another VDA. So only the profitable VDAs will be taxable and the loss VDAs will be ignored completely. So sale consideration less cost of acquisition is the capital gain. Now let us understand the points. So the indexation benefit is not available in case of VDAs. No deduction will be allowed pertaining to cost of improvement, expenditure on transfer, mining, infrastructure cost, etc. No deduction will be allowed for expenditure incurred in connection with transfer of a virtual digital asset. No deduction under Chapter 6A or any exemption under Section 54F shall be allowed from such capital gains. Set off benefit is not available for loss arising on transfer of VDAs. Even loss arising from transfer of VDA cannot be set off, like we discussed, with gain arising from transfer of another VDA. Benefit of carry forward of losses are not available, and when if basic exemption limit is not available, rebate, however, is available because that is not classified as a set off. Now talking about 56 to 10. So 56 to 10 applies when any person receives any benefit whose value exceeds rupees 50,000. So similar to that, if a VDA is received without consideration and the aggregate fair market value exceeds 50,000, then whole, and if the difference is more than 50,000, if it is for consideration but not adequate consideration, then also it is taxable. So in the list of assets which is covered under 56 to 10 by an amendment, Finance Act 2022 has also included VDAs. You can see in the last point, it also includes VDAs now. Now understand in this, because now let me show you one thing which is very relevant for you and which specifically is applicable for individuals and HUF where slab rate is applicable. Now let me take you back to this. So 115 BBH was taxing on income, which we have discussed, but now see the third point, which was intentionally not discussed in our earlier discussion. For the purpose of this section, the word transfer as defined in clause 47 of section 2 shall apply to any virtual digital asset, whether capital asset or not. So now understand this thing. This might be a deviation from what you ordinarily read in section 2 subsection 47, where it only involves capital asset and other than capital assets are not considered under 2 subsection 47, because transfer itself relates to capital asset. So this is a different thing for you to understand. Here transfer is, and that's why when I discussed about differentiation between PGBP and if I have to say differentiation between PGBP and capital gain, I said that in both cases 30% tax is applicable. So in this comes from this particular line because it includes both transfers, whether it is transferred as a capital asset or otherwise. But why I said that things are different under IFOS, and that is my interpretation. Again, a clarification to that respect is again sought from the CBDT, is because when you are receiving it as a gift, because what is taxable under IFOS is a 56 to 10 scenario, right? And the 56 to 10 scenario arises when you are receiving as a gift. So in that case, you are not transferring. So to my understanding, 115 BBH shall not be applicable and rightfully can be benefited against by an individual LHF who is having a slab rate of income. That's why I said that the benefit arising from such gifted is taxed as per normal slab rate applicable on the assessee and not as 30% under section 115 BBH, as the same is not transfer of VDS. However, when I subsequently transfer it, then it is covered under 115 BBH. So friends, I suppose I am being able to make this point very much clear to you. I'll re-emphasize on this point. The point is that 115 BBH, as you have seen, is related to transfer, And the clause 3 of that section itself says that it is applicable on transfer as defined under section 2 subsection 47 is applicable for both capital assets and otherwise. But if you are receiving it as a gift, to my understanding, that does not fall under the category of a transfer for the recipient. And that's why for the purpose of 56 to 10, to my understanding, the flat rate of 30% taxation under section 115 BBH shall not be applicable. I again say that is to my understanding. However, a clarification to that extent is expected. So the government, while framing the taxation rules, has also framed the TDS rules for this. A new section under section 194S was introduced, which was made applicable from 1/7/2022. Remember, the applicability or the taxability was introduced from 1/4/22, but the TDS was introduced from 1/7/22. So who needs to deduct the TDS? Deductors, any person who is responsible for paying to a resident person. Rate of TDS is 1%. Limits, no limits. The standard limit is 10,000 rupees, after which you shall be deducting TDS. However, a beneficial rate of 50% has been 50,000 has been given for individuals and HUFs whose total sales does not exceed 1 crore in business and 50 lakhs in profession, which we also see in other TDS provisions. So for an individual and HUF whose sales does not exceed 1 crore in business and 50 lakhs in profession during the preceding financial year, for them the TDS requirements shall start after the limit of 50,000 rupees. And for such individuals and HUFs, the requirement of having a TAN or having a requirement of deducting tax at higher rates under section 206 AB shall not be applicable, even if it exceeds 50,000. Right? When shall it be deducted? As a normal payment or credit, whichever is earlier. Payment by any other mode or at credit, whichever is earlier. What are the other points to be considered? In the following cases, before releasing the consideration, the person responsible shall ensure that the tax has been paid in respect of such consideration for the transfer of VDA. So when there is a consideration, supposedly you are transferring a VDA and receiving a consideration in kind. So the person responsible for deducting the TDS in that case shall ensure that when the consideration is being paid in kind, before that the adequate TDS has been complied with, or when there is an exchange between two VDAs and there is no part in cash, but the cash is not sufficient to meet the TDS liability. And obviously 194S will prevail over all other provisions, whether it is 194O or 194Q, whatever it is. Now CBDT has issued few guidelines on 22nd of June 2022, which is covered under circular number 13 of 2022, to remove difficulties in implementation of 194S. Okay, so I've just listed down the key points for you to understand, which we'll discuss, and it is also available, as I said, in circular number 13 of 2022 for giving a quick read, right? So first point which I discussed, that in case where TDS is deducted under section 194S, it will not be required to be deducted under 194Q. Now comes the situation where trade in cases where VDA is owned by the exchange. Now what is the meaning of exchange here? Exchange means scenarios like Wazir X or something like that, which is for working as an exchange for dealing in cryptocurrencies. If I have to say, let us stick to a normal general definition of cryptocurrencies. Let us term the exchange as exchange WX, right? So you get the meaning of exchange, which we'll be discussing now. The platform which is used to trade cryptocurrencies is termed as exchange. So in a case where that we are trading in the cryptocurrencies, supposedly I'm buying a cryptocurrency and the cryptocurrency is being owned by the exchange itself, then the primary responsibility to withhold tax is of the buyer or is a broker. Alternatively, an exchange may have a written agreement with the buyer broker that the former would pay tax. and the exchange would be required to furnish a quarterly statement in the form number 26 QF. Trades where a broker is the seller, supposedly there is a third person involved and he is the seller, then buyer will be only responsible before creating or making payment to the seller. And trades where broker is not the seller and also exchange is not the seller or the owner, then broker can take responsibility to withhold tax if there is a written agreement between the exchange and the broker. Transfer of VDS for consideration in kind. Existing law provides that tax has to be paid by the seller before consideration is handed over to him or her. Right? As I discussed in the earlier also, that the buyer needs to ensure that adequate taxation has been complied with before paying of such consideration. An alternative mechanism is prescribed wherein an exchange can take on the responsibility to withhold tax based on a written agreement. The exchange required to withhold and pay tax for both legs of the transactions. No further obligation in present is on the buyer and seller pertaining to withholding of taxes. What is the consideration amount for withholding of taxes? So as applicable in all TDS provisions, it is of net of GST and other charges, as is applicable on all other general TDS provisions. Withholding tax where payment gateways are involved. Payment gateways will not be required to withhold tax if the tax has been withheld by the payer. And it can take an undertaking from the payer. Now, as was applicable on other 194Q and all, since it has been introduced from 1st of July, the limit of 50,000 or 10,000 will be seen from 1st April itself. Like supposedly from 1st April to say 30th of June, the total is say 45,000. I'm talking about an individual. And after 1st of July, it is say 10,000 in the month of July. So whether TDS will be applicable? Answer is yes, because the cumulative is reaching 50,000. But on what amount is only on the amount after June. So let me take another example. Supposedly from April to June, the amount is transacted is say 60,000. And on 1st July, there is a transaction of 10,000. So then what will be the TDS norms? It will not be applicable on 60,000, but that 60,000 will be seen to determine the limit, and from the first rupee itself, from 1st July, the TDS will be applicable, but it will be applicable only after 1st July, not on transactions before that. The transaction before that is only seen for the threshold limit purpose. And the last thing, because recently the VDA schedule has also been introduced in all the ITRs. So this is how a VDA schedule will look like, and is very relevant when you file your returns for assessment year 23-24, right? So income from transfer of virtual digital assets. These are serial numbers. Then the date of acquisition, on what date did you acquire? The date of transfer, on the date on which you are transferring. Head under which it is taxable, whether it's taxable under capital gain or PGBP. Now, as I said, this is a very important question. Why this differentiation is then important? It might not be important for income tax purposes, but like we were discussing in my earlier seminars also, there might be an implication of other things, such as implication of GST vis-a-vis its differentiation between capital gains and PGBP. And it might be a differentiation under PMLA, whether you're doing a business of it or whether you're holding it as an investment. So there might be other external factors before determining in income tax whether it is a capital gain or PGBP, though might it not have a direct consequence in income tax itself, right? Then it talks about cost of acquisition in case of gift. In case of gift, if taxes has been paid under 56(2)(10), then the amount on which taxes has been paid. And in any other case cost, like if this gift is from a relative or by will or otherwise, then cost of the previous one. And what is the consideration received and what is the income transferred? See, here also it is written, enter nil in case of loss. So like if there are two virtual digital assets, asset 1, asset 2. Asset A is having a profit of 50,000 and asset B is having a loss of 40,000. So what will be taxable is entire 50,000, and the loss of the other asset B will not be allowed to be set up from asset A, right? And here also in the last it is written total sum of all positive incomes. This schedule is only relevant for capital gains. For PGBP, we will enter in the normal PGBP schedule because this is linked to C2 of scheduled capital gains. But that does not mean that it is taxable only as capital gain. It is also taxable under PGBP and it will be ordinarily included in your PGBP schedule. But this schedule VD has been specifically inserted for the capital gain asset thing. See, if we talk again, see this VDA schedule, it talks about two different, like there might be two different scenarios. One where I've received as a gift and one where I've received purchased it. So in that cases, I have to enter it under two heads. And ideally, it will not take a loss in that case also in the column 7.
Yeah.
So if I enter it on transaction wise in this schedule VDA, then ideally between two Bitcoin transactions also the same scenario which I've discussed between Bitcoin and Ethercoin will arise. So that was the brief.